Thank you. I'm John Chi with China's Taixing Media. Just following up on the report that the U.S. government is potentially restricting U.S. investment in China, including delisting Chinese companies from the U.S. stock market. Probably this question is for Chad. Is it really possible? What would be the basis for doing that? Is about like declare national emergency, and is that going to be the legal basis?
So I play a lawyer on a podcast, but I'm technically only an economist. So I think we don't know. It's still a little bit too early to tell, but I agree it's worrisome, and we have seen President Trump tweet that he knows what IEPA is, and so the International Emergency Economic Powers Act, is sufficiently broadly written that who knows how he and his legal team might try to interpret it. I think it's early to think that this is imminent, but I think it's definitely something that's worrisome and to watch out for.
So in this respect, what do you think might be, like a realistic? I saw like there are comments saying it's not realistic to, block the investment at all, but there might be some possibility to.
So, I mean, the way I interpret it is it may be far off into the future to force delistings and things like that. Okay, but what they have done by simply sending the signal is at the margin, if you're thinking about, considering a stock offering somewhere, you now take that into consideration, right? And so this is likely impacting, creating uncertainty that is going to force companies to rethink what their plans might have been. And if it would have been cheaper for them, or they would have been able to, raise better forms of capital on a Chinese exchange, but now this, they say, boy, this headache, I don't need to deal with this, let me do it somewhere else. They may choose to do it somewhere else going forward, but there's cost to that. It's now going to be more expensive to do that. They're going to be able to raise less money, be able to do less R&D, have less competitive products. So there will be economic implications of this.
Mm-hmm. Another question. As the negotiations coming next week, what do you think the U.S. political thing is going to influence the trade negotiations? For example, the possibility of impeachment and also the coming general election. Thanks.
You guys have an impeachment prediction on the U.S.-China trade war? I've personally stopped trying to, or if ever I did, predict President Trump, so I'm not going to weigh in on the implications of impeachment.
No comment.
It's a good question.
Next question. Hi, Brandon Hughes from FAO Global, and thank you so much for your insights. Our company helps give market access to China and the Asia Pacific, and one thing I was curious about, especially specific to you, Cinnamon, and your members, is what are the considerations that members are going through for their plans for in China for China? Is this accelerating that initiative? And then are they concerned about losing competitiveness or market share to European or Japanese counterparts? Thank you.
Yes and yes. Again, we did an informal survey with our members, and they did say that they are increasingly looking at the in China for China strategy going forward. So that's certainly something they are pursuing. And yes, in terms of losing market share to foreign competitors, that is a real concern. And again, as Joe mentioned, once you lose those supply chain connections, they're very difficult. I mean, again, they've been built up over decades, and so it's very difficult to build those back. So yes, both of those are true.
I think the other point that's recognized too is something that Chad raised is, one of the ways that China's been retaliating is lowering tariffs on other countries. So it makes it easier for other countries to go in and get those investments where you are losing out as a U.S. company.